So can you tell me if company is good just by looking at the revenue? Exactly no. And that is why investors use something that is called the financials ratio. Hey everyone, this is Abhishek and this is my 27 of my simplifying finance and investment banking concepts. Let's understand the financial ratios why we are going to use. Imagine you are going to buy a used car. So would you only ask how fast can it go? Of course not. So you will check the engine, mileage, service history and the overall conditions, because one number can never tell the complete story of anything. Companies work exactly in the same way. Just looking at the revenue or profit is not enough. And that is why investors, investment banking and the analysts, they are going to use something that is called the financial ratios. So think of the financial ratios like a company's report card. They help us to answer the questions like if the company is making good profit, can it is going to repay its loan, does it have enough cash to survive, is management is using the shareholders money efficiently. Now here's the interesting part. Financial ratios are mainly divided into 5 parts. Profitability ratio. These ratios basically tell us how much profit a company is making. For example, gross profit margin, net profit margin, ROE, ROA. Second, that is the liquidity ratio. These ratios tells us whether a company can pay its short-term obligation on time or not. Like current ratios, quick ratio, acid test ratios. These are the liquidity ratios. Then we have the leverages, that is also called solvency ratios. So these ratios shows us how much debt a company has and whether it's financially stable or not. Like debt to equity ratio, interest coverage ratio. These are the leverage ratio. Then coming to number 4, that is the activity ratios. These basically tell us how efficiently a company is going to use its assets and the resources. For example, inventory turnover ratios, assets turnover ratio, receivables turnover ratios. These are the efficiency ratios. Coming to number 5, that is our valuation ratios. These are basically help investors to decide whether a stock is expensive or cheap. For example, P ratio, PB ratio. These are the valuation ratio. So don't worry if these names are sounds new to you. Definitely we are going to explain in our upcoming videos. So follow for more.